Hello everyone, welcome to another episode of Ask NDB Wealth mid-month market update for the month of September. I am Harni Vijayaratnam and with me I have my colleague Vihanga Jayasinghe who will start off today's discussion with interest rates.
Thank you, Harni. In the fixed income market, Treasury bill rates declined during the weekly auction with reductions ranging from 15 to 30 basis points across all three tenors. The weighted average yield for the 3-month bill decreased to 18.16%, the 6-month bill to 15.19% and the 12-month bill to 13.35%. The entire offering of 160 billion at the auction was fully subscribed with significant interest expressed on the 3-month bill. The domestic debt optimization plan was successfully completed on the 12th of September, in which 84% of the superannuation funds holding bonds agreed to exchange them for longer term maturity bonds. Additionally, the central bank conducted a bond auction offering 3-year and 5-year treasury bonds with a total issuance of 90 billion. The auction generated substantial interest with offers totaling approximately 243 billion. The 3-year bond was issued at a weighted average yield of 15.58% and the 5-year bond at 14.64%. At the issuance window for the auction, we witnessed a significant level of interest on the two bonds, with approximately 5 to 7 times as many offers as the window's capacity allowed. Significant participation was witnessed by the EPF at the bond auction, with more than 50% of the bond auction being subscribed to by the EPF. As a result, given the limited success rate for the other buyers at the auction, we saw the secondary markets reacting with heavy buying interest building up, primarily on the recently auctioned bonds and similar duration bonds, with the yields on these bonds declining by 1 to 1.5% in the market. Looking at the interest rates internationally, the European Central Bank and the Russian Central Bank raised their policy rates by 25 and 100 basis points, reaching 4.5% and 13% respectively during the month. And with that, Harni, over to you to start on GDP.
Thank you, Vihanga. On 15th of September 2023, Department of Census and Statistics released GDP results for the second quarter of 2023. The Sri Lankan economy contracted by 3.1%, mainly driven by the significant contraction in the industry sector by 11.5% and the service sector by 0.8% year-on-year. However, the agriculture sector experienced growth of 3.6% year-on-year. Overall, the real GDP declined by 7.5% in the first half of 2023. While it is a decline, the numbers are improving. As of 15th of September 2023, the exchange rate depreciated marginally by 0.2% compared to the month-end exchange rate as of August 2023. For the first 8 months of 2023, tourism earnings and worker remittances were recorded at $1.3 billion and $3.8 billion respectively. Gross official reserves for the month of August was reduced to $3.59 billion, down from $3.76 billion in July, partly due to the repayment of loan given by Bangladesh. The Colombo Stock Exchange is set to introduce regulated short selling through stock borrowing and lending, allowing lenders and borrowers to capitalize on the market trends and prevailing interest rate for a predetermined period. Eligible securities will be evaluated on quarterly basis. During the mid-month of September 2023, ASPI and S&P SL20 increased by 3.2% and 3.6% respectively compared to the month-end as of August, and the average daily turnover was recorded at 1.72 billion rupees. Market was weak initially due to profit-taking on the banking counters and the uncertainty that prevailed initially due to the IMF committee review meeting. And later, improved sentiment was witnessed in the construction sector and hotel sector. Net foreign outflow were recorded at 1.32 billion rupees during the first 2 weeks of September. Thank you.
Thank you, Harni, and thank you for joining another episode of Ask NDB Wealth.